Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on April the 5th, 2022 with the live streaming Forex market analysis for you. We've got a lot of ground to cover. We're going to tell you about some positions that we're working, but before we do any of that, we want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes as well. So some of these things are, well, the trades are already on, so don't chase these things, that's for sure. All right, before we get any further though, we want to just remind you really quickly, if you haven't done so already, to subscribe to our YouTube or Twitch channel, and please like and share it to your friends and out on social media, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. All right, without any further ado, we have the forex-trading-unlock.com website pulled up here. And we already hit the workstation button on our tab navigation tab bar, and we're going to skip past the numbers on this page here and check out what's going on with the Euro US dollar. So the Euro US dollar, which we happen to be short right now, we had a bearish engulfing line sell signal that had occurred right here. For those of you that don't know what a bearish engulfing line sell signal is, it's a high probable Japanese candlestick pattern. Okay, so here is where we had our sell signal, and as you can see, we went from making a higher move high, and as of today, we have touched off a lower move low. Hooray, this means our trade is now in action, it is in gear, and we are watching to see how it will manifest itself. So, just for transparency's sake, to let you know, I am currently short the Euro US dollar. In fact, let's see, we short the Euro US dollar, and we have a stop right now in at 110.65. Okay, so just to let you know. So we are short from 110.85 and also from up around just below this close from this bar here. So we have a nice little lead on this trade, and we have a nice protective stop in, and happily we have made successfully a lower move low today. All right, so now obviously the bear trend is the overall trend. This move here that we had recently that is now over has been an upside correction. And ever since the beginning, we had this buy signal here, which is also a high probable Japanese candlestick pattern called a 3 inside up buy pattern, that set us up for this rally. Now, ironically enough, we made this lower move high, higher move low, which confirmed that we were in a neutral to positive corrective phase. We made a higher move high, once again confirming that short-term strength. Then we came back and made this higher move low. And I remember that when it came to here, it had just fallen short of our first target into our upside target zone for a correction. Now, with all the momentum, when this was occurring, we were already talking about how it may just brush off and just tip it, you know. So then it came back, it pulled back, made this higher move low, and then we put in this nice support line here to hold. It was holding the corrective trend intact. It bounced, we had a nice rally here, and then boom, we had this sell signal that occurred. This completed the upside trade. It penetrated the 50% mark, was up towards the 0.618. I'll show you how this works here. If you go from this high down to this low, and then you take a look at the 50% mark, that's where it just crossed the first day, settled above it, then it opened, and then made a higher move high, and then fell apart and traded lower into the closing of it that day. This set up the sell signal. Now the sell signal is also going with the overall trend. We have an overall bear market going on. So the one thing that's nice about this is that it confirms the momentum of the market, the overall attitude of the market, and now we'll talk about why it's doing what it's doing. Now remember that this is in a bear market for multiple reasons. The Euro US dollar is under pressure because of the high price of oil, because of the fact that their economy is I wouldn't say stagnant, but it's under a lot of pressures. It's as they're coming out of their lockdowns and trying to get their economy jump-started. Now we have the Ukrainian-Russian conflict, which obviously has a big influence on what's going on in Europe. So between the see, here's the thing is, everyone was so quick to put on sanctions for Russia, which I am not against or anything. I'm not getting political on this. The only thing is there's ramifications on both sides. So where you put sanctions on Russia, that also puts problems and stresses on the EU when it comes to their energy costs, as well as the fact that one of the biggest areas that the EU exports to is, guess what? Russia. That is correct. Believe it or not, Russia is a big consumer of EU goods. There's a lot of factories in the EU that are just dedicated to producing things for Russia exclusively. Well, guess what happens now with the Ukrainian-Russian conflict and by the sanctions? None of these factories can produce and ship. Well, they can produce all the goods they want. They just can't sell them and ship them to Russia, which means now that they have now closures of factories in the EU just because right now they can't send their goods anywhere. They're all developed and made for Russia. They don't have any other outlets for these things. So this is putting a big strain on the EU economy. So anyhow, these are things that we have to pay attention to and watch. Let's see if we have any questions on Twitch. We have no questions on Twitch, but we have some good viewership here. That we are very happy about that. Thank you guys. And let's see what we got going on YouTube here. So on YouTube we have, let's see, got some people there. We got a couple of likes. Want to say thank you for that, guys. All right, so let's get back to this analysis now. Just doing a little round robin to see if we have any interaction on the chat and stuff like that, which I will get to your questions as we get through this analysis as well. All right, so the Euro US dollar, where are we going now? All right, so now that we've confirmed the bearish trend is back intact and we had this sell signal, the question is where are we going from there? Okay, well, let's take a look at that. So if we go from this low to this recent swing high that had ended our correction, okay, and we'll put down from this high to this high. As you can see, the market is wedging, but we have a nice, we have a nice slope as far as downward sloping resistance, keeping this trend intact. It's very, it's a very viable slope. It's not too steep. It's almost like a 45-degree angle where we had a lot of selling off momentum. Then we had the correction, which helped stabilize things. Came up to this area. Obviously, this is where we failed. The resistance became too strong, and now we are confirming the weakness. So the geopolitical thing is one of the biggest things weighing on the euro. Are we going to parity? It's very possible that in the longer run, that we could get down to parity. Now, is that going to happen over the next couple of weeks? I doubt that, unless we had a huge, monstrous run-up in oil. The thing is that the EU is not doing anything to really support their currency, not like what Japan is planning on doing, which we'll get to that one. That's why when we get to the Japanese yen, we got a lot of currency crosses to talk about. There's a lot of good action swinging in some of these major crosses that are not including the dollar, but we use the dollar as an indicator. All right, so as far as going to the bottom here, are we going to continue to blast through resistance, or support rather? I don't think it's going to be a heavy sell-off. I think what we're going to have is a gradual decline over the next few sessions, and I wouldn't doubt it if before the end of the week we actually take a little test of this 108 area by this last swing low. Reason being is, if this was just a correction, okay, let's just say that instead of this original bottom here, that this was a correction here, that this was an actual bottom that we're basing. Well, if that is the case, well, then we need to find support, and we need to find support very quickly, because right now we are resting on trading below the 0.618 area on the Fibonacci basis. So we've already hit the targets for this. If this is just a short-term sell signal, meaning that it isn't a corrective one, if this is actually a true bullish correction that's going to continue, whether it's a correction or the beginning of a major bull market for the Euro US dollar, we have to make higher move highs and higher move lows. Now we're making a lower move low that also took out the 50% through 0.618 target zone if this was just a short-term sell-off, meaning that we would have found support, we would not have taken out this swing low, okay? So at the very least, we know that we are in neutral for sure right now. There's not a doubt in anyone's mind, or should there be, that that is the case of what is happening, okay? So, so for all of you bulls out there, I would be very, very cautious. You know your risk. It's the last swing low that we had back here in the beginning of March on March 7th. Anything below here, and you're in a lot of trouble. I already think that we've already fallen through key support. I would look to sell rallies now, and I would not try and catch a falling knife. So let me see if we have any questions about the euro before we move on to see what's going on with the British pound. So we got some really interesting other crosses to talk about when we get to the pound too. We got a pound yen trade that you guys are gonna love. So all right, so we have no questions there. All right, cool. We do have a little more interest on Twitch. Thank you guys for showing up today. We appreciate it, and on YouTube. All right, so we talked about the Euro US dollar. It's making new lows. Now, if you're a bull here and you think that you're going to try and pick a bottom, which I totally think you should never do, it's definitely one of the worst things you can do is try and pick a top or a bottom. You know your risk is this swing low. Okay, now as far as upside potential, you're going to need to take out this last swing high where this sell signal occurred to even start to think that you could hold up in this 112, 113 area. And the only way I can fundamentally see this happening, just in case some of you are trying to get bullish this market for some reason, is that you would need to see oil sell off another $10 to $15, meaning having oil down to 90 or less a barrel, okay? That ain't happening anytime soon. Just there's no reason why that anyone could possibly believe that that's going to happen with the way the governments of this world are acting right now. Okay, so it's just impossible. So that one throws that out the window. The other factor would be that the U.S. would have to curb its interest rate policy, which now it has accelerated. We know that for sure before the 2022 is out, the Federal Reserve from the United States will have raised a total of 2% at least, for sure. That is definitely on the table now. Originally it was 0.75%, now it's 2% over the course of the remainder of 2022. That gives a lot of strength to the dollar, okay, versus any currency, especially the euro, where their interest rate policy is obviously very weak. All right, let's go to the British pound, US dollar. Now, thanks to Brexit, the British pound, even though it's a little bit bearish, it's not quite as bearish as the euro US dollar. In fact, right now, I would use cautious being a bear. I think right now you have a very low risk buy against this low right here that was set a couple of sessions back. We have a short-term buy signal. Currently, this is a corrective move, but it has some upside potential. We had this initial buy signal right here. Here's a nice, this was two types of buy signals, which if you read the book, High Probable Japanese Candlestick Patterns, you can learn what it is and how to trade it. Then we also had another sell signal here that capped our correction, okay? Now this market overall has been in a bear market. A lot of it has to do with the interest rate policy more than anything else, because when it comes to oil, the UK is one of the world's largest producers of oil, so that one is kind of neutralized, okay? So, but geopolitically, the nice thing is that although the UK is definitely involved with what's going on between the conflict in Ukraine and also with the EU. Remember, Brexit occurred. The UK has its sovereignty back. The UK is no longer a country that is part of a confederation of countries run by some unelected board, you know, meaning that they control their laws, they control their economy, they control their central bank. That is all gone. Now, the UK has always kept their currency sovereign, but it had to answer to the EU, and also it had to funnel a lot of money into the EU for social programs, these programs, or just infrastructure, whatever. Money had to flow out of the UK into the EU. Now it doesn't have to do that. So their resources are much stronger. They're coming out of COVID lockdowns like everyone else is. However, unlike the EU, the UK has a very good chance of bouncing and firming up no matter what goes on, good or bad, over the next 3 to 9 months. Meaning that I would say, even if both currencies are down versus the dollar, the euro is the one that's going to take the brunt of the blow. Now remember also that the euro and the pound are the two biggest aspects of the dollar index. The dollar index is now coming back to flirt with resistance again. Now it's been chopping around here, and yes, it's made some lower move lows and lower move highs, but this is a correction off this top. It's not trending lower, it's basing right here. So I would use caution, especially as the euro starts to hit support, that the dollar index is not the best indicator of where the overall currency markets are going, but it is a good indicator of what's going on with the euro for sure. Now the pound is gonna limit that trade, because you're gonna have a little bit of divergence. Like today, you can see the pound is higher and the euro is lower. So that's where the divergence comes into play. That's also why I say that it's more likely that you're gonna see the pound hold up and maybe even have bigger corrections to the upside, whereas the euro is gonna go sideways and not have these types of things occur. Okay, so very solid level here from this last swing low. We had a buy signal. What does this target? Well, right now currently we are targeting this last swing high. If this market is still in a corrective phase or remotely turning bullish, it needs to make a run at resistance, and it needs to pair us $1.33. $1.33.01 basically even. So if it gets above here, remember this is where the market found support. Okay. Now before also this came a little area of pivotal trading where it was hovering below. Okay. So the question is this going to be true resistance and hold the market back? Or will the market pierce it, which if it does, I think you have a good chance of maybe seeing some consolidation in this area. Remember, there was a swing low here. So you have where you had support, it becomes resistance. So I think you'll bounce up, maybe chop around in this area, come back, find some support again where this high was, somewhere in this upper 132 area, and then start to trend higher again if it remains in a bullish phase. Okay, so right now what would do that? Well, right now the oil factor is pretty much a neutral, especially if the Bank of England starts to do any type of selective, well, besides interest rate hiking, they do a lot of quantitative easing, which is the opposite. Now they have to do the opposite. So if they start laying off of that, and if they start to also talk about supporting their currency, which has been in a bear market for quite some time, that would be a reason to start to get bullish to pound. So we are not bearish overall, even though it's in a bear trend. We're kind of neutral on the pound now, looking to get some confirmation. Now, should we fail from this low? Now, this is very key. So I'm not overly bullish here. I am long, just to let you know. Right now, I am long to pound versus just a little bit below this low. So just for transparency's sake, I want to let you know that yes, I am involved in the British pound. Let's see, the stop is in at 130.52. Okay, so that's where I have one stop here. That's for one trade, and I also have another stop in at 130.45. That's the one just for the longer term position, because that's where I think we have a good base, and I don't want to just get stopped out meaninglessly on this one, especially if we get a good run with the pound. Because when we get to some of these other crosses, you'll see why I find strength starting to emerge in the pound because of what it's doing to other currencies. So, and as those currencies get weak versus the pound, some of them are also strong versus the dollar, which means if they're strong versus the dollar and weak versus the pound, the dollar is going to be weak versus the dollar. So that would give credence to us having not just a basing here, but starting to set up a nice little rally. Okay, so for those of you that are out there, if you have any questions about what we just talked about, especially that relationship, please don't be afraid to chime in. Okay, it'd be very important to participate and make sure that you're clear on this. So for those of you that are new to listening to my webinars, I always say that when it comes to indicators, the very best indicator out there is always the market itself. Okay, and that's what we use for when it comes to direction in the long run, because that's in real time. All other indicators are lagging. They are in the past no matter what. Not that they're not useful, but you have to take them for what the information for what it is. Okay, so pound US dollar, we are looking for a continuation of a little consolidation here, and we were looking also for a run up towards higher move highs to challenge 133.01. The only thing that takes us off the table is if we fail from $1.3048. All bets are off, because obviously we're hitting support again. That would confirm a lower move high and trying to make a longer term lower move low. But in the short run, we know that we had this lower move low, lower move high, higher move low. So that right there sets us up for neutral to higher in the short run. We have the buy signals that confirm it. This longer term one here could be we hit the short term upside target. The question is, sometimes these actually are the true bottoms that set the base for support for a very long time, which if that's the case right now, I'm looking at a couple of good buys, because I'm not looking to get out and take a profit at least until it breaches 133. Now I will raise my stops as we get higher towards this and make sure that at the very least I have a break-even trade here. But we'll see how that manifests, and we'll continue to keep you posted on that as well. All right, so we have the two trades that we've already talked about that I'm in. Euro US dollar, short that, long the British pound US dollar. Now remember, think about this. Remember I said there's divergence right now? I'm backing it up by with my own money, because the euro, I am not bullish, and I'm bullish on the pound. Both of those are the two biggest indicate parts or components of the dollar index. So where those two go, especially if they're in tandem, that's where the dollar index is going to go. So the dollar index, like I said, you can't use as a total indicator for all your currency crosses right now. All right, U.S. dollar Swiss helps to show the strength when it comes to the EU, and also gets back to my theory, or what I believe of what I'd said when it comes to the EU versus the UK, of where strength lies and where it doesn't. The Swiss, they don't have oil, they don't produce oil, okay, and then also they are no longer as neutral of a country as they used to be. This is the first time in history the Swiss have started to go in tandem with any narrative or side in any conflict. Always they've been neutral with either side, whether you want to call them the bad guys or the good guys, whether it was World War I, World War II, Spanish America, any war in the United States and what have you, before when we were just a young country, what have you. The Swiss have always been a neutral, safe haven when it comes to money and banking. That is no longer the case. That makes them no longer a flight to quality currency as well. That's one of the reasons why they are one. That's giving strength to the US dollar. Our aggressive interest rate policy is also doing that. Now, we had a buy signal that occurred a couple sessions back. For transparency's sake, I am long the US dollar Swiss, and I have a stop in at 91.92. Okay, so I am down here, right there, 91.92. This is where my stop is in, okay? So I'm long from down here, obviously, and now I have a nice little lead on this trade. So now this market has been in a grinding higher bull market, meaning that in the long term, like as soon as it makes a breach of resistance, it spikes up like this, and then all of a sudden, boom, you get the correction. Now here's something to be mindful of when it comes to how trends work. You get your biggest corrections in the opposite direction in the trend, meaning that when you are in a bull market, you get your biggest rallies. When you are in a bear market, when you're in a bull market, you get some of your biggest breaks. When you're in a bear market, you get some of your biggest rallies. Okay, so the action is the trend itself, but the reactions a lot of times are very, very potent moves, which give you great opportunities to get back in on the trend at a great level. As you can see, this is a really good buy area. If this is consistent of anything that's been going on, we are in the basic consolidation area for the US dollar Swiss, where once it does break out to the upside, we're good to usually get a nice move that gets us above 93.5 and challenges at least this 93.75 area. Since we were making higher move highs and now we've established a higher move low, that keeps the trend intact. Now this is a very grinding, you can see the slope is not very steep. It's not even a 45, which that's a good solid trend as a 45. This is a little bit lower than that, which gives it it's like the little engine that could. It's the tortoise moving up the hill. It's taking this less steep of an incline, but it's definitely making its way higher. Okay, so right now we're long. Now if you're a bear, unless you have some sell signal or you're already in the trade, the key is you need the market to get below 91.95. So if you're bullish like I am and you're working a trade, or if you have a buy signal in, this would be your key risk area here, 91.95, a few pips below it. Why? Because it's the last swing low, and we also have this nice upward sloping support line that, guess what? It came right through here, it hit this point, and it's just short of this low here. So this line is very solid. So if we take out both the upward sloping support line plus this swing low right here, that confirms weakness. It also means that the shorter term trend, which this here, we made a high, we made a higher move low, lower move high, lower move low. We could be just making a lower move high, which means what? That would be indicative of a bearish trend. Okay, a bearish trend means that the market is going lower. So you want to look for sells, not buying areas when it comes to that kind of a trend. So US dollar Swiss, we are definitely bullish. Remember, fundamentally and technically, there's every reason to believe that the US dollar Swiss is in a buy dip scenario. How high can this one go? Well, let's just say that it's only a correction and the bull market's running out of gas. So on a short-term basis, we have our 50%, we have our 0.618. This gives us a nice little target setup area as far as an upside target zone. If this was only a correction, or if it's going to go more sideways, see how these topping here, you have resistance here. This comes into a key area where the market could run out of gas and start to chop, 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 chop. So I'd be very leery of expecting this market to go like this. Okay, it's more likely that you're going to see the market kind of go like this, and then make a run up for resistance once again. Now, anything can obviously happen. You know, we'll see. We have to monitor things. Remember, the Ukrainian-Russian situation by the day is always changing. Here's the one thing I think you can bank on when it comes to that whole turmoil and conflict. One is, we know it's disturbing global markets. The longer that it lasts, the more likely it's going to disturb global markets even more, especially when it comes to inflation and it's going to cause a lot of geopolitical tensions throughout the rest of the world. As things are not shipped out of Russia, you got to remember, either someone else has to make up the gap, and that's going to be very hard to do. And it also means that you're going to put strain on the rest of the world. No matter what, strain's going to happen on the world. The question is how much strain happens and how much it happens where. So that could cause a lot of strife as we head into the fall of 2022. And by Christmas time, if this thing is still going on at Christmas time, I can promise you that these markets are going to be swinging all over the place. And the one thing you can say is we're going to have opportunity to make a lot of money. Don't just race into things. Be very cautious with what's going on, because as the risk levels go up and these tensions go on geopolitically, it's not good for everybody as a whole, you know. And then the question is if we can come to a meeting of the minds and get some peace, then how long of a settling period is there going to be? So then you have to be prepared for when the brakes get put on things for that trade. So right now we are counting on the fact that until we have a ceasefire at the very least, and a solid ceasefire, that this situation is not just going to last it's already been going on for just over 6 weeks. I'll tell you what, regrettably, I see it still going on 6 weeks from now. I hope that it ends 6 minutes from now, you know. And the terrible thing is that war is never good no matter what, and people are suffering. The innocent suffer the most, and there's plenty of innocent people right now that are suffering. So, but anyhow, we have our trade for the US dollar Swiss. Now let's get into the one that's going to really set us up for some great trades that are going on. And besides the US dollar crosses, folks, there's all kinds of major crosses. I know we have followers that are from the UK, from India, from Europe, from South America, and from all over Asia and stuff like that. You know, even Australia, we've got a lot of these guys. Like, we're going to talk about some Australian crosses that don't involve the dollar. Remember, we use the dollar as an indicator for how these are going to go, and there are some great swing trades that you guys are going to love when we get to as we unfold these. So let's get to the Asian zone and start to get into these fantastic trades. All right, US dollar yen. Now, you know that I've been long this market for a very, very long time. I actually got out. Not only did I get out, I got short on this day. Not because of any particular signal or because I'm a genius, but on this day when it spiked, it had pulled back, and I was thinking this was just such a big up day. This was last month, Sunday into Monday, and I'm like, you know what? It just is such an exhaustion. This has to be a profit-taking slide. But then I started to really look into the news, and I found something that wasn't being covered anywhere at all, which makes no sense to me, is that the Bank of Japan came out last Monday saying that they will support their currency and not allow it to continue to collapse. And they drew a line in the sand saying if their currency hits $1.30 US dollar yen in price, that they are going to come in and raise interest rates and also take other actions through the Japanese government. So you have the Japanese Bank of Japan, which does not just react and just do things willy-nilly, and also the Japanese government that they don't mess around. They're not like our government that's going to deliberate, create an extra committee to see if they're what the consensus is, and then think about what may or may not occur, and you just let things drift on and on. The Japanese, they drew a line in the sand at $1.30, and I don't care what time of day or day of the week it is, the second the market touches that level, they will come in and they are going to raise rates. And I don't think they're going to do something mamby-pamby like the U.S. Federal Reserve and do like a quarter point or even a half a point. I would think that they will do a minimal of a half a point, and most likely overshoot what the Fed has already done, they will probably go for 3/4 of a point to 1 full%. That would set up a move in the yen in all the yen crosses. That will be a fantastic trade. However, if you're on the wrong side of it and you don't have your risk weight right, you are going to get slaughtered, because markets go out like they come in. And this market had a lot of velocity, and then it started to come back off that news. Well, now look what it's done in the last 3 sessions. This was just a short-term correction, and we know what the news is, but the strength is recurring, and that's because oil started to rally again. We have the Treasury bond market hitting new lows again on the daily basis. So after rallying for a bit, so the dollar is getting strong because of the interest rate factor. The dollar is strong versus the yen because of oil. Now, if you look at this correction, let's go from this low to this high. How far did we go so far with this swing low? Okay, this swing low is in between the 0.23, so it didn't even get down to the 0.382. Now, if this is just a short-term correction in a very strong bull market, this area here right around 120.56 would be a good base of support to then see the market. If it was just going to range trade and consolidate, that would be about where you would see support bottoming out as it consolidates and then tries to make a run at resistance. Okay, now if this is a true short-term just correction, we should get down towards this 119.22 area with an extreme of around this 117.81. Now, the Japanese have not done anything yet. The question is this market going to flirt with a rally and take out this previous swing high? I think so, because I'm the only one that's talking about this Bank of Japan thing besides the Japanese. Everyone else is concerned about all kinds of other things, which, well, that's great, because they're just thinking, well, on a dollar basis, it's just one currency, the yen, and right now everyone's worried about Europe. Well, I look at all the currencies, I look at the globe as a whole, and our opportunities are definitely in the Asian currencies right now. So, and we'll get through the Australian trade. Remember also I told you the pound is integrated? Well, we're going to get into that as well. Now, I did get out of my trades when this happened, okay, just to let you know. And I actually had a few shorts where I basically averaged out those trades. And then I got long again back here on this day. Why did I get long here? Well, because of the way the Treasury bond market is behaving and because oil was basing. So unless we see a huge sell-off in oil, and if the Federal Reserve in the United States decides to not be as aggressive as they just went overboard saying how aggressive they're going to be, which would be flipping their speech, nothing could justify it that I could see fundamentally or technically that would bring on such a behavior. Okay, so that being said, I think we still are going to make a run through resistance, pierce through this 125. Now, I think it's going to get sketchy once we get to 126, 127, that it's going to get really volatile. I'd start to expect swings like this. Like we had this momentum of this big rally. Let me get this fib thing out of the way. Markets tend to go out like they come in. We had this big rally. It looked like it wanted to start to fall apart, but momentum from this bull market is strong, and now we're starting to set a base no matter what. So the question is the longer we hang in this area, the more likely it is that we're going to challenge resistance than it is that we are going to test support to the downside. So remember, this swing low is key. If you're an aggressive bull right now, this is your line in the sand. If we take out this low here, you want to wait for a valid buy signal before you get in. And if the Bank of Japan raises rates in front of the 130 level, then obviously that the US dollar yen is in not just a short-term corrective mode, it may be turning into a bearish mode for a while until the US can counterbalance the interest rate influence. Remember that interest rates are a function of currency pricing, so that every central bank has something to do with an influence on strength or weakness in their currency. Once again, the Japanese government, the Bank of Japan, have come out saying that they are going to support their currency and keep it from imploding. So once again, for transparency's sake, I am long the US dollar yen. Now we're going to talk about a British pound yen and Australian dollar yen okay? But first, let's get to the Australian dollar. So Australian dollar, US dollar, look at this. Finally broke out to the upside yesterday, confirming this bull trend. We've been saying for the past couple months, once they declared they were coming out of their lockdown measures, and especially with this current pricing of raw commodities. This inflation is exploding. It's only benefiting and giving strength to the Australian dollar. Higher oil also helps the Australian dollar. The interest rate difference between us and them, that is outweighed by these other factors. Okay, now the beautiful thing is, let's say that you're not long the Australian dollar, or maybe you're not even bullish on the Australian dollar. Well, it certainly is a great trade when you're talking about the pound, or excuse me, not the pound Australian dollar, but the Australian dollar yen trade. Okay, so now the yen has been weak versus the dollar, and even today it's just kind of stalling. Now the Australian dollar is very strong versus the U.S. dollar today. So what does that mean? It means Aussie strong dollar, Japanese weak. Well, if Australian dollar is strong versus the U.S. dollar and the Japanese yen is weak versus the U.S. dollar, then the Australian dollar, Japanese yen should be strong. See how this works? Now we had a very interesting continuation pattern here. So for those of you that have read my book, High Probable Japanese Candlestick Patterns, you would know what this is. We had peaked out this day here. This is the same day when on Monday of Sunday into Monday, when the Japanese said what they were going to do to support their currency. This 3-day sell-off, and then with this nice little buy level here, this is a 5-day pattern here. Look it up in my book. It's a continuation pattern. So a continuation pattern means that whatever trend you are in this case a bull market, after this day, that's a buy signal indicating that you're most likely going to make a run and challenge the current high that was set at the beginning of this continuation pattern. As you can see today, we are looking to flirt with that challenge right now. Once again, Australian dollar is strong versus the dollar. The yen is weak versus the dollar. So that makes the Australian dollar strong versus the yen. It helps to give credence and strength to this trend. Look at this, it's a lot like the US dollar yen trade, very vertical. This one's even stronger. And because of this consolidation and going here, this gives me the understanding that no one's paying attention to the Bank of Japan besides me. So I'm the only one that's looking and getting ready to, I'm raising my stops and making sure that when it turns on a dime, that if I'm not short into it, I'm definitely not giving up my profits off of this long-term trend that I've been working. So, but right now, I'm taking advantage of Australian dollar Japanese yen trade. I have a stop loss at 92.28, so that has me right there. Okay, so that's where I'm at. Okay, so I got a nice lead on it today and as of yesterday. So we actually are long from just below that. We are now in a profitable trade no matter what. So that's a nice thing, and we have a couple of them on down. We bought on this day, and then we bought a couple around there. So we have a nice, let's see, we have what, 1, 2, 3, yeah, we've got a 3 lot on this one. So we're looking to see this thing pierce resistance and continue higher. So this is a nice little trade for those of you that are looking for opportunities. Remember that you don't just have to look at the dollar crosses. You can look at the other crosses, and believe me, there are opportunities, and always you can use another market in the currencies as an indicator for direction. Now, does it mean on every single minute minute it works that way? Absolutely not. You have to look at it on a daily and a weekly basis and even monthly basis. To look at anything on an intraday basis is all noise. You're going to have too many head fakes. You will chop yourself up, and the only thing you're going to do is rack up a string of losing trades that then you have to compensate with winners. And I mean compensate because when you make unnecessary trades, you're just throwing money away, which is your money. You want to do that, you go right ahead. All right, so we looked at the Australian dollar Japanese yen trade. Now we're going to look at the British pound Japanese yen trade. British pound JPY, and then we'll get into the New Zealand dollar. All right, so British pound Japanese yen. So if the pound is neutral, fairly neutral, and also like stronger today versus the dollar, and the yen is weaker versus the dollar, it's the same situation. The pound should be strong versus the Japanese yen. We spiked out. Remember, I told you that was a big move. All these cross rates versus the yen spiked on last Monday. Now they've all came back, short-term correction, just like the U.S. dollar yen, and now we can see that they are not just consolidating, but getting ready to challenge resistance once again. I think that this resistance or this trend of moving higher is going to continue unless you take out this last swing low, like on these other charts. I think that you've found your base and you're looking to challenge resistance once again. Now remember, when the if the Japanese yen hits 130, that's their line in the sand, that means they raise rates. That impacts all of these crosses. So right now, all of them are looking to pressure resistance as we head towards that 130 mark in the US dollar yen. Obviously, it's a different mark in the pound yen and the Aussie yen, what have you, but they are looking to do this. So for those of you that are paying attention still with this, I hope that you're getting gaining some nice information on how to trade some of these other crosses when you don't find opportunities in the majors. Now, also be mindful of trade the bigger crosses because there's definitely liquidity there and you have decent spreads getting in and out of them. You don't want to trade like the US dollar, Turkish lira, there's a wide spread in that and the margin is monstrous. Okay, so that means that getting in and out, you're giving up something getting in and out to begin with. So you don't want to be on the wrong side of that trade because it just compounds your losses. All right, so now let's take a look at the New Zealand dollar, US dollar. As you can see, this market has spiked a little bit higher today, but it's not as strong as the Aussie dollar. Now, this has its own problems. So a lot of times the Aussie and the New Zealand trade in tandem. They sort of are right now, but not to the biggest degree. To the upside, New Zealand dollar, no matter what, is not as strong as the Aussie will be against the dollar. A lot of it has to do with its own internal government getting in the way of things. I would look for bigger corrections to the downside. Remember, that goes right along with in your bear market. You see your biggest, you see some of your biggest. Excuse me, right now it's a bull market. You see some of your biggest breaks in a bull market, which would confirm like what I'm looking at here. So like just as we topped out here, look for a sell-off like this or like this, you know, and then a grinding higher to make new highs. Whereas with the Aussie, that's exploding to the upside. I would look for that to have smaller pullbacks and consolidation before it continues to pierce resistance. So are we bullish this market? Only slightly. I would use the last swing low as your risk just below here. If you're bearish, I would use caution because right now there's no reason to think that this higher move high and higher move low trending higher market is going to stop. Just be mindful. I would rather look for breaks to buy than rallies to sell with this market and I think that you'll have more bang for your buck with buying opportunities like here. Like when we had this sell off here, we had another high probable Japanese candlestick pattern. This day we came down. We had a short-term pause and then we reversed in a nice way here. That set us up for a nice momentum move to the upside. I think you're going to see that continue. All right, so and for transparency's sake, I do not have any trade on in the New Zealand dollar, US dollar. US dollar, Canadian dollar. This market here has been probing new lows today. It looked like it wanted to bottom. It's a tough trade. It's a grind. This one is just tough. I would wait for a valid signal. I would be cautious buying into this market. There's a lot of mixed reasons geopolitically and even through the fundamentals with commodities and stuff like that, because Canada is a commodity country. There's a lot of, it's a dog with fleas. That's all I can say, you know. So I would use caution when it comes to the US dollar Canada trade. But as far as hitting new lows, is it likely? It's very, very possible that it could happen. So let's see where we're at here. Okay, we got this, and we can change our stop here. So I would say for a stop level, like right here at 125.42, this is where you should really look for. If you're short, I would be short against this level. And if you're looking for a breakout to the upside, this is a key area. If we take out this last swing high, lower swing high, that would at least give us a reason to think that this market's going to consolidate and be neutral and look for a slow grind up to resistance. Now, the thing that it could be weighing on this market the most is oil. If oil continues to bobble where it's at and maybe pull back and to like the mid 90s, then you might see a rally in the US dollar Canada. But with oil flirting with another upside move, I think that it's very possible that you're going to see another slide and pressure on support. I wouldn't expect a major sell-off. I think it's going to be a grinding lower trade. So once again, if you're bullish, then trade off the low of today. This is your risk right here. Obviously, we're right in the middle of the range for today. Anything below here means lower move lows after lower move highs, which means that you're on the wrong side of a trend. So when you're trading a counter trend trade, keep your risk tight. because otherwise you're just, I mean, you're trying to catch a falling knife, and you're doing something that I always say you don't do, which is trying to pick a top or a bottom. So if you're trying to do that, well, that's you're doing it wrong. So we don't want you to do it wrong. All right, let's double check here. Do we have any questions? No, we got a bunch of likes on YouTube. Thanks, guys. Got a few there and a couple watching, and also on Twitch. Thanks for you guys hanging out today. All right, so we talked about these currency crosses. Let's just take a look at a couple cryptos for you. We had the BTC USD, which has started to run into resistance just around where we were looking at last week. If you listen to our videos, we were talking about how this area should start to give them a little resistance and expect some consolidation. I think that this whole rally in Bitcoin is Ethereum led. I think that is why Bitcoin has seen this rally. I know there's some popular news about some people buying or whatever, but you know what? That's all. If you're trading anything off of what other people are doing, just remember, you don't know what they're really doing. Just because they're said they're buying something doesn't mean they're not, you know, they could be adding to a position. Maybe they're not even in a position, you know, and just because they tell you they're buying, it doesn't mean they're not simultaneously getting ready to sell instantly a bunch off of that. Especially if they get in, start to see some profit, why wouldn't they sell into a self-motivated rally? Because cryptocurrencies can generate that. Making higher move highs and higher move lows. Right now we look at this as you have to watch for the breakouts. If we take out this swing high, obviously the trend is your friend. I would look for it to take out this swing low at 44,381 and then look for a slide back towards 42,000 to 40,000 and see a consolidation around there. ETH USD, here we go. Now this is the one, like I said, I think has been holding up Bitcoin. You can see Bitcoin is a little bit weaker than Ethereum, and now since Ethereum ran out of gas to the upside, Bitcoin all of a sudden starts to lose its validity as far as strength. Ethereum, do I see this thing waning and start getting set up for a sell? Yeah, pretty much. I think that you may flirt with resistance a little bit, but that's very unlikely. Obviously, key off of the high from a couple sessions ago above here. I think it's just going to be a grind, and I wouldn't have high expectations for a big rally here. I think we've hit fair value to the upside, and now we're setting up for a correction back to take out this last swing low here. And should we take out 32.11, I would honestly say that you could probably find a good basing area somewhere around 2,800. If there's overall strength in this trend, then around 2,800 would be a good little value. So we've discount this erroneous spike here. This is really where the trend base is. 2,800 is my number. That puts it right here. So somewhere for this market to slide and trade back down to here, consolidate, and then maybe bounce or go sideways. We'll see what happens. I think that that's where you have the biggest chance of the market getting to. All right, so let's go back to the Euro US dollar, which is where we started. And look at that. It made lower move lows since we've been talking. Yay, that's good for me. I'm very happy about that. Catching some nice trends this week, so you know where we're at as far as trades. I'm going to go through them really quick for you just so you have an idea of where we're at. We have our money up on the table. Now, that's because we're doing this. We're not telling you to do anything at all. Remember, you make your own choices. Don't buy the market unless you have a valid buy signal. Don't sell it unless you have a valid sell signal. Know your risk. Weigh your reward to risk option before you ever take a trade. Never take bad ones, and never chase a market either. So all the things we're talking about now, they're already in motion. Do not try and chase these trades, but be aware of them. So if we're right, we'll tell you when we start to take profits and where you can look for some other action. All right, so the Euro US dollar right now, we are currently short. The pound US dollar, we are currently long. That's because we have divergence. Those are the two biggest players in the dollar index. We are taking an opposite side in which one is weak and which one is strong with the dollar. We are short in the, then we have the US dollar Swiss trade, which we are long. We have the US dollar yen trade, which we are long. We have the British pound JPY, which we are long. And we have the Australian dollar JPY, which we are long as well. Okay, so we have all kinds of things going on. We don't just have the dollar in play today. We have some other things going on. And we're looking forward to see how these things manifest over the course of the week. So one real quick last look around the world here. All right, we got no questions, but we have a bunch of likes and a bunch of viewers that have popped by today. Hey, thanks all of you guys for showing up today. We really appreciate when you guys come in when it's live and take time out of your day and pass it on to your friends. And don't forget to watch these over again. They're going to be on YouTube once we get off this end of the stream, so you can pass it on to your friends and review what we talked about today. If there's something that you missed or you want to go over, which I highly suggest you do. Leave some comments too, by the way, on our YouTube videos and what have you, and we will get to them, and we will also bring them up in our future videos, because questions that you ask are questions that other people will probably have as well. So check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, written by yours truly. You can learn how to integrate these trading signals into your own trading strategies. The chapter on money management alone is worth a whole college education. It is priceless when it comes to this book. You can't even put a cost on that. Plenty of people in the industry, friends of mine that have read the book and stuff, they're like, I can't believe this. That alone should be a series, you know. So, and it's all valuable. It is applicable to anyone's trading style, and it will also point out if you are not aware of certain things, or if you are doing the opposite, it'll show you how to clean up your trading. So very important stuff in there. Check it out. And as always, go to forex-trading-unlock.com for your Forex trading information, and we will look forward to seeing and having you guys around soon. Take care.